Today on Stock Charts in Focus, we're talking process, showing you how you can use ChartLists to build up a daily or weekly routine that you can execute on the site. Now, specifically, this show is going to be a little bit different because we've got a giveaway for you. We're going to talk about routines, talk about process through the lens of my own personal toolkit. We're going to dig into two of the chart lists out of my own personal daily process, my daily market review. And we're actually going to give you those chart lists. So you are going to leave today's show with some giveaways. You're going to have two chart lists to add to your account. You can use them as is, or you can start to use those as an inspiration to build your own daily market review process. You're going to see it all in action. We're going to do it in real time. So we've got a lot to cover on the show today. Of course, you know what it is. It's all new. It's all here. It's Stock Charts in Focus. All right, my friends, welcome to the show, Stock Charts in Focus. Of course, our product focus show here on the channel where we dig into the site, dive into the tools, show you around the features, and ultimately help you get more value out of Stock Charts. That's our mission here every Friday, 3 p.m. Eastern Time, up on the live channel, also up on our YouTube channel after that, and the on-demand platform at StockChartsTV.com. Lots of different ways to watch. My name is Grayson Rose, Vice President of Operations here at StockCharts.com. Really good to be with you for another episode. And this one, as we mentioned in the open, is going to be a little bit different. You know, we spend a lot of time on this show talking about those tools and showing you around features. We talk a lot about, what's new, what we've just rolled out at Stock Charts. Today is going to be a little bit different because we're going to talk more about process. I want to get you thinking. This is going to be one of those shows that really gets those gears turning in your head. And we're going to do that sort of through the lens of my own personal process, some of the tools from my own personal toolkit. Now, you are going to leave today's show with two chart lists. We've put these up actually in a shareable format at a shareable link. So we're going to give you the link to both of the chart lists that we're going to look at. And you, if you're a Stock Charts member, can actually install that into your own account. You can do a couple of things with that. You can use it as is. These lists are fully functional. You can start to use them just like we're going to talk about them today. Or you can use this kind of as an inspiration. Again, this is a show where we want the gears turning in your head. I want to get you thinking about what your daily market review process is, what your weekly market review process is. It is so important for all of us as traders, as investors, to have a consistent process, a consistent set of routines that we're going through day in and day out, week in and week out, month after month. This is going to be kind of a look at some of the ways that I do that using chart lists. I think chart lists really are kind of the secret sauce on Stock Charts that lets you build up a process like this. You're going to kind of get a window into that on today's show. So I want to get you thinking about those concepts, and you can use this as kind of a starting place to build your own daily market review process if you don't have one. If you do have one, this could also be a great opportunity to kind of evaluate that, maybe see some other charts in action, think about things that you want to incorporate into your process. So again, you are going to leave today's show with some chart lists that you can actually bring into your account. The other great thing about that is that we've got some pretty complex charts on today's show, some pretty wacky things, different setups that you can use sharp charts and ACP to build. So you're going to actually get those charts in your account. What you can do is kind of reverse engineer them. You can actually sort of pick these charts apart. Once they are in your account, you can see exactly how they were set up. For instance, on Sharp Charts, you can scroll down to the bottom of that Sharp Charts workbench and actually kind of see the settings that were used to create these charts. So we are still looking at tools. We are still looking at features. We're going to have some fun talking about markets today. And again, looking at some of the processes that I use, some of the things that I like to review every single day in the markets. But again, you're going to get those charts in your account and you can actually see exactly how they were set up, start to tweak them, start to modify them, use some of those settings, some of those ideas in your own process. You got lots of ways to use today's show. It's going to be a lot of fun. So to get these chart lists, we'll mention this as we go again, but down in the description below, if you're watching this either on YouTube or on our on-demand platform, down in that description below. We're going to have 2 links to both of these chart lists. Again, you can click on those, see all the charts, but if you're a StockCharts member, you can also install that chart list, save that chart list into your account. That's going to give you the option to kind of get these charts right in your own account. So lots of fun that we're going to have on today's show. Now, before we get up and running, we'll mention this at the end of the show as well, touch on it a little bit more then. But ChartCon 2022 is kicking off in just a couple short weeks, October 7th and 8th, coming up very, very quickly. We have assembled an incredible collection of experts coming out to join us in Redmond for this very special 2-day virtual conference. We've got incredible technicians, incredible traders and investors, and charting financial minds. People like Larry Williams, Linda Raschke, Martin Pring. We've got content from Mark Chaikin and Tony Dwyer, Mish Schneider. So many incredible experts that are coming together to really share their wisdom, share their thoughts. And specifically in this time around, we're going to dive into market volatility. We're going to talk a lot about how they use market volatility to their advantage, but also how they handle that, how you navigate those changing seas, those different climates that we find ourselves in, especially this year. So it's going to be an incredibly timely 2 days. You can register for ChartCon right now if you go to StockCharts.com/ChartCon. You got all the info there. You can also register if you're a StockCharts member. You get a special price, so definitely don't miss ChartCon 2022. That is coming up very, very soon. Exciting, exciting stuff. The other benefit too, if you're a StockCharts member, you're going to get that conference for the rest of time. You're going to be able to watch that content back at any point. So definitely sign up, definitely save your spot for ChartCon. But also, if you are not currently a StockCharts member, there are tons and tons of benefits to signing up before the conference. Plus, that'll give you the chart lists from today's show. So speaking of today's show, let's dive right in and take a look at some of these chart lists out of my account, start talking about processes and daily routines. Here we go. So we're starting today's show on the dashboard. Now the dashboard is really kind of the heart and soul of your StockCharts account, but it's also the best place to access your chart lists. So here on the dashboard, once you've logged in, there's a big chart list button up in the top right corner. I'm going to give that a click, and that's going to take us right down to all the chart lists in my account. So what we're talking about today, again, we're going to run through these 2 chart lists. I want to show you all the charts in there. We're going to breeze through those. It's going to be a bit of a whirlwind tour. But again, you're getting these chart lists on today's show, so you can really sit with those, revisit today's episode as you go through those charts at your own pace. What we're talking about, though, are all of these lists up at the top of my account. Now, we're picking and choosing 2 of them. We're picking and choosing 2 of the lists that I like to review on a daily basis. But as you can see, we've got sort of 2 different groups, and we have a ton of lists in here. We've got a whole section up at the top called Weekly, and then the name of the list. We've got a section down at the bottom called Daily. As you might imagine, these are my weekly review lists, things that I make sure I review every single weekend. And these down below are those daily lists, things that I try to review every single day. Now, they do different things, but the idea here is that these are my routines. This is my review process, really packaged up and put into one specific place. So when I click into one of these lists, I can review all the charts in that list and simply flip to the next list, and I can run from the top all the way down these lists. That's actually something that I do every single Sunday. That's part of my kind of Sunday portfolio review, Sunday market review. I'll start at the top here and review all of these chart lists, go through all of those charts. Having that routine, having that consistent approach is a total game changer. For us as traders, as investors, the idea of a routine sounds a little daunting at times if you're new to this. But really, that is the secret sauce. That is the secret to success in the markets. I've said to a lot of people over the years that trading and investing is not actually that difficult. What makes trading and investing so challenging, so difficult, is not the trading and investing itself. It's having the discipline to stick to a routine, stick to a process, stick to a strategy, day in and day out, week in and week out, every month, every year, through all conditions, through rising volatility, through boring times, through crazy times, through all of that. You have to stick to your process. You have to stick to your routines. And that is what makes trading and investing so difficult. We can make that easier on ourselves by having a specific set of daily and weekly routines, and we can really build that daily and weekly routine into chart lists, as you're going to see. So again, the idea here is that I've got the same set of chart lists that I'm reviewing every day and every week. I'm coming back to those same charts through all different market cycles every day, every week through time. And that makes it really, really consistent for me. I'm seeing the markets through a consistent lens. And so as things are changing, I'm not jumping all over the place to different corners of the markets and looking at it differently. I'm using this consistent process every single day to see the same things. So a little bit of background. Again, I want to get the gears turning in your head. Think about how you can use chart lists to build your process. Again, this is kind of my process from the top down. Weekly routines and daily routines. I have a whole bunch of charts that I call my market evaluation charts. You're going to see some of those in the daily list today. But I've also got chart lists set up for all of the global equity indexes that I want to follow, all the US equity indexes that I want to follow. I dig into a couple specific indexes like VTI, the S&P 500, and the Russell 2000. I've got lists in here for the US sectors, those different sectors of the market. I've got lists in here for the industry groups, the Dow Jones industry groups as well. And then I kind of repeat that with the daily process. Those are typically shorter term charts as you're actually going to see on today's show. But the idea, again, is that I've got all of these here. I'm looking at the markets through a consistent lens, and I'm executing that process, executing those routines consistently every day and every week. So as we go here, think a little bit about your own routines. Are you doing the same thing every day? Are you using chart lists to your advantage? Are you reviewing the same set of charts and watching the markets consistently? Or are you bouncing around? Are you inconsistent? Are you not executing your system, your process with enough discipline? Those are some of the key concepts that I want you to think about. Now, on the show today, what we're going to do is review my, again, daily market evaluation list. And then we'll also take a quick look at actually my daily US equities list. I want to show you how you can use chart list reports to your advantage for that one. What we're going to do though is dive right into that daily market evaluation list. We're going to go through this one by one. And again, down in the description below, you're actually going to have links to pull up these chart lists in that kind of shareable format. And then you can actually save those to your own StockCharts account. So very, very cool. Again, you can use these charts as is or use them as a starting place for your own process. So we're going to jump over here to Chartbook. This allows me to view one chart at a time. We are doing this in the Sharp Charts world. All of these, because I've used this process for many, many years, all of these charts were actually originally created in Sharp Charts. The cool thing though is that if you're an ACP, if you are an ACP user, over there in the chart list sidebar, you've got a little bit of a tab for ACP charts or Sharp Charts. So if you actually save this Sharp Charts list into your account, you can view it in ACP, view basically ACP versions of all these charts. Quick little note for you ACP users out there. We're going to flip through all of these charts though in this list, and then we'll jump over to that second list. We'll talk through these kind of briefly. Again, not going to get into too much analysis, but I want to tell you kind of what each chart is and why it is there. So I like to start out, I've got these numbered in a specific order so that this list is actually very organized. And again, it's always in that same order. So you might notice actually we've got numbers here. Those numbers for each saved chart allow me to keep this in a specific order. I want to start at kind of the top of the market and I want to work my way down to different corners of it, different sectors, different industries, different specific indexes, things like that. So the starting place for my daily review is John Murphy's classic intermarket view. We've got a whole bunch of different assets on here: stocks, bonds, oil, gold, the dollar, and commodities, all of those. We're looking back over about a 6-month time frame, and we're basically looking at a performance view. How have these different asset classes been doing? We can see that the strongest asset in here has been the dollar, just ripping to the upside, and everything else really getting slammed as a result. But over time, I look at this again every single day, so it's interesting to see these changing tides. You know, a few months ago, especially a year ago, this was a very, very different picture. But this gives me a sense of kind of how some of those different primary asset classes are doing, again, all based off of John Murphy's work. So we've got all of those charted at the top. We can see how all of those are doing. And then down below, we've got a couple of key ratios that I like to follow. We've got bonds versus stocks, we've got gold versus stocks, and we've got commodities versus stocks. Now, as a proxy for stocks, I like to use VTI. You'll see that actually a ton through all of these lists. VTI is the Vanguard Total Index, represents the total US stock market. So that's what you can see there. That's what I like to use kind of as my proxy, my index for stocks. Some people use the S&P 500, some people use the Dow. Personally, I like to use VTI, and that is actually a position that I own. So that's the great thing about it. If I like what I'm seeing out of VTI, I can actually just go buy it. It is an ETF. It is tradable. So anyways, a couple of key ratios on this chart down below. Now, the nice thing about Chartbook, you can either click these previous and next buttons at the very top, or you can actually just click right on the chart, or even use the arrow keys on your keyboard. So I'm going to give this chart a click, and we have now moved on to our second chart in my daily market evaluation list. So this is global markets. This gives me a sense of kind of how some of the different global indexes are doing, how stocks around the world are performing. The black line is going to be the total world index. Again, these are all Vanguard indexes actually. So the total world, all the stocks in the entire world lumped into one index. How is that doing? We have the total stock market in blue. That's going to be the US. And then we have the total international index. That's everything in the world minus the US. So I can get a quick look at the world as a whole, quick look at the US, how that's doing relative to some of these other areas, and then I can look at the entire world without the US. Again, some key ratios down here at the bottom. So we have how is the US stock market doing relative to the total world? Is it outperforming or underperforming? You can see here that the US stock market broadly is outperforming the total world. This is kind of one of the best places to be in the world as a result. And then we have the Vanguard Total Index, US stocks versus the rest of the world. Same kind of picture, the US outperforming the rest of the world. So a quick look at kind of the US versus everything else that is out there. Moving on, we have a look at developed versus emerging markets. Now, I do this in a couple of different flavors. Again, we've got the emerging market index in black. In blue, we've got the developed market index. And then in purple, we have an emerging market index without China. So China, obviously an outsized component of those emerging market indexes. So if we strip that one out, because it is such a big component, kind of like Apple in the S&P 500, if we strip that out, I want to basically see how are the rest of the emerging markets doing without the China effect. So we can have both of those on here as well. So we're looking at emerging markets versus developed markets in that top ratio, and then we're looking at emerging markets without China versus developed markets. Now, at times these move very differently depending on how China is doing. So that's been pretty interesting actually in the last couple of years. So we have a look at developed versus emerging markets. Then we get back into the US. So now what we're looking at are the different market cap tiers. We're looking at large caps, mega caps, mid caps, small caps, even micro caps on this chart. So sort of from top to bottom here, again, that black line typically is going to be the US stock market. I try to keep that consistent across a lot of these charts. The U.S. stock market as a whole, though, which really is kind of a proxy for large caps because it is a cap-weighted index. But we've got the total U.S. stock market there in black. In purple, we have the mega caps. That's the S&P 100. In blue, we have large caps, the S&P 500. Green is the mid-cap index, S&P 400. Red is going to be that small cap S&P 600. And then in orange, we have a micro cap index as well. So this gives me a sense of how the markets are doing at different cap tiers. Are small caps leading? Are mid caps leading? Are mid caps and small caps and micro caps lagging while the mega caps and the large caps continue higher? That's been one of the stories that we saw about a year ago. Actually, 2021 was an interesting example of that. With mid caps and small caps and micros just kind of drifting sideways while the rest of the market continued higher. So it's interesting to have those all on one chart. Again, that performance view up at the top, and then a couple of key ratios down below. So this is actually looking specifically at mega caps versus large caps, S&P 100 versus S&P 500. Then we have mid caps versus large caps, small caps versus large caps, and micro caps versus large caps as well. So we're actually bringing in the S&P indexes on this chart in addition to VTI, that total stock market index. Next up, we've got a couple of different market factors, things like growth versus value versus income, dividend payers. So we've got those on one view here as well. The black line is going to be the S&P 500. The gray line, is going to be the S&P 500 itself. And then we've got a couple S&P 500 factors. So green is going to be growth, red is going to be value, and blue is going to be those high dividend yielding stocks, the income stocks. So we've got all those factors here as well. We can see, what's leading, what's working, what's being favored in the market. At times, this is really heavily favoring growth. That was the story in 2020, especially. And value stocks were really lagging. Dividend stocks were really lagging. Now this is really flipped. Value and dividend has been kind of leading the charge in the last couple of months, especially last year, especially, and growth has been hit. So again, we've got some key ratios down below. We've got S&P 500 growth versus S&P 500 value, growth versus value ratio. We can see which one is leading between those two. We've also got dividends versus the S&P 500. So a nice look at whether dividend payers are leading the S&P 500 or not. And then a couple other factors. We've got momentum versus the S&P 500 here, quality versus the S&P 500 here, and then high beta versus low volatility. So a couple of different kind of market factors and some key ratios that I like to follow to give me a sense of kind of what's happening in the S&P 500 below the surface or behind the scenes. Clicking on, similar kind of concept, we've got market factors at different cap tiers. So here we're looking at growth versus value versus the standard index. In the S&P 500 up top, we've got S&P 500 growth in green, S&P 500 value in red, and then the S&P 500 itself in black. And then we do the same thing for the S&P 400. We do the same thing for the S&P 600. Now this starts to get into one of those charts that's pretty complex, pretty unique. This is a great example of a chart that you can actually model other charts after. If you take these charts out of this chart list, you can look at the settings, look at the way that I created this with these kind of three panels. This is all in one chart, just organized in a particular way. So again, part of the idea here is to either give you all of these charts if you want them, or you can use this kind of as a starting place to start to customize your own views. So anyways, I look at market cap factors. Then we get into Dow theory. We've got the Dow Industrials and the Dow Transports on one view. Both of those charted down below. And we've got both of those in kind of a percentage flavor as well. We've also got a ratio of the two at the very bottom. So this gives me a sense of how those two classic Dow indexes are moving. Are those ripping higher? Are they getting slammed to the downside? Are they drifting sideways? And how are they moving relative to each other as well? If the transports are getting slammed, but the Dow Industrials are moving higher, that tells me one thing about the markets. If they're both getting slammed as they are right now, that tells me another thing. We can do the exact same thing with what we call new Dow theory, which is the S&P 500 and the NASDAQ instead of those two Dow indexes. Dave Keller actually does a great job talking about this. This is something that I picked up from him quite a while ago, incorporated it into my daily review. But it's nice to have these charts on here as well, taking a look at some of those classic indexes and some of the most important indexes for the current markets. We can put those on one chart, on one screen, flip through those as well, Dow theory and what we call new Dow theory. Next up, we have advancers and decliners every day. So we're looking at the NYSE, and we can actually measure how many stocks are moving higher, how many stocks are advancing, how many stocks are moving lower, how many stocks are declining, what percentage. So up in the top here, we have the advancing issues versus total symbols. And then the red panel, we have declining issues versus total issues in the entire NYSE. So today, for instance, we're recording this on a pretty ugly day in the markets. We can see that 92% of the NYSE is declining on the day. We can see that only 7% of the NYSE is advancing on the day. So a nice look at kind of how strong the market is, not just as a whole, not just the top number, is the market going up or is the market going down, but what percentage of stocks in that index are actually moving up or moving lower. So interesting to see there as well. And we've got kind of another look at that down at the bottom. We've got the NYSE itself as well on that chart. So advancing issues and declining issues, something that I like to keep a close eye on every single day. Next up, we do the exact same thing for the NASDAQ so that we can see here we've got, 85% of the NASDAQ declining on the day, only 13% advancing. So a little bit better than the NYSE, but not too much. This is still a pretty ugly day. And I've actually drawn some horizontal lines across this chart to make it easy to see some of those key levels, 50% and 75% as well. Same concept. We've got our ratio down at the bottom and the NASDAQ in the middle. Next up, we've got to look at the VIX. Pretty classic chart here. I've drawn a line at 20, which is kind of, a key level that we like to watch. But we can get an eye on, or keep an eye on volatility here with a simple chart of the VIX. Now, this has been an interesting one because the VIX is climbing, but it's really not at chaotic levels yet. VIX below 30 is not too outrageous. So this has been an interesting chart to watch here. We do have a crazy market, but the VIX really not reflecting the insane volatility. Makes me think that there might be even more pain to come. So interesting to watch that. Now, next up, we've got what I call cap size momentum. So again, at some of those different cap tiers, the S&P 500, large caps, mid caps, small caps, S&P 400, S&P 600. How is momentum looking? We can think about momentum for those different groups. Are we seeing a lot of momentum moving to the upside for small caps? Are we seeing the opposite? Maybe mid-cap momentum is drifting lower. In this case, we can see that we've got really fading momentum, declining momentum across the board for large caps, for mid caps, and for small caps. So this chart gives me allows me to kind of dig into momentum at those different cap tiers. And then down below, I've actually added a couple sort of key sectors, and we can think about momentum for those key sectors as well. Again, the idea here is the momentum favoring offensive corners of the market, or is that the momentum favoring defensive corners of the market? So if staples and utilities are the momentum leaders, that's actually very, very defensive, even if the market is going higher. If consumer cyclicals or consumer discretionary and technology are leading on the momentum chart, that's actually a lot more offensive for the market. So I like to keep an eye on kind of where the momentum is. The black and the brown are those defensive sectors, and the pink and the purple are those offensive sectors. And in the middle, we have the S&P 500 itself. I do the same thing kind of in concept with all of the sectors on one chart. So we can take those momentum indexes for all of the different sectors, put those on a chart and kind of see, again, where the momentum is. Is it with defensive corners? Is it with offensive corners? Is it fading? Is it increasing? When we came off those June lows, for instance, we started to see the momentum pick up really across the board. All of those kind of momentum lines started moving higher. But at the same time, we were seeing a lot of momentum in things like utilities, things like energy, which wasn't necessarily as bullish. So now we've got declining momentum. The leaders there are still utilities and still energy. Actually, we've got consumer staples ticking up a little bit above energy now. Again, not too offensive, not getting me too excited about this current market. So anyways, we've got sector momentum up next. Then we dive into a couple of key ratios on offense versus defense. So we've actually got discretionary versus staples, kind of the classic offense versus defense ratio. If this ratio is moving higher, that means we are playing offense in the market. If this ratio is moving lower, that means we're playing defense. Kind of chopping around here actually, but broadly moving lower. So that's showing us that the market is actually favoring defense, just like we saw with some of those other charts. We do the same thing with this purple line, offense versus defense through discretionary versus staples, but we do that in an equal weight flavor. So this top ratio is the standard sectors, XLY versus XLP, and we've got the exact same chart, exact same ratio, but using the equal weight versions of those two sectors here in purple. Then I've added two other ratios that I personally like to watch to, again, get a sense of offense versus defense, technology versus utilities, kind of the extremes there, super offensive versus super defensive. In this case, we can see that because this ratio is moving lower, that means that utilities are actually outperforming technology, which again, very, very defensive. And then within one specific group, healthcare is kind of an interesting sector because it does get split a little bit. There are defensive corners of healthcare, but there are also offensive corners of healthcare. So I like to look at how biotech is performing relative to healthcare. Biotech, of course, being one of the industry groups that actually sits within that sector. So another interesting ratio that I like to follow there. Next up, we look at breadth. We've got a rolling 10-day average of new highs versus new lows, minus new lows in the NYSE. This is basically a simple chart to think about. If it's positive, it's good. If it's negative, it's bad. Think about it that way. That rolling 10-day average. We look at new highs minus new lows in the NYSE, but then we actually hide that and we do a 10-day moving average with an area chart on it. So we can see that we've spent pretty much the entirety of 2022 down in the gray in this specific chart. But that means that we've had very, very weak breadth in the NYSE, as we can see here by that rolling 10-day average. Then I like to drill into a couple of the classic breadth measures, looking at the number of stocks, the percentage of stocks in different indexes above key moving average, something that a lot of technicians do. You'll see this a lot. So the NYSE percentage of stocks above their 200-day moving average and above their 50-day moving average. We can see both of those percentages, incredibly weak numbers right now. Again, I've drawn some horizontal lines at some key values, 25 and 50% and 75%. But I can get a quick look at breadth basically on the NYSE, see where those numbers are. I can also get a quick look at breadth on the S&P 500, same concept, percent above their 200-day moving average and percent above their 50-day moving average. And then the purple lines, we do the same thing for the NASDAQ. So some classic breadth charts here. But at a quick glance, I can see that breadth is incredibly weak across the board. We've got very, very weak numbers here. Compare that to things that we saw kind of at the end of 2020, the beginning of 2021, where we had some of those breadth numbers up in the 90%. Now we're down in the low teens. Some are even in the single digits. So a very, very weak breadth across the board. We want more participation. If the market's going to move, we want more participation to the upside. It's kind of like, how many people do you have at the party? It's going to be a good party if you got a ton of people there, right? So that's why we follow breadth. If you got no one at your party, it's probably not going to be that fun. Anyways, we do a couple of other things here. We look at new highs. We've got new highs in the NYSE specifically, also in the NASDAQ, also in the S&P 500, then in the mid cap, S&P 400, and the small cap S&P 600. This is an interesting chart. If you just kind of look at this for the first time, it might not be too important. But if you use this again, every single day, this is a chart that I look at every single day. So I can tell you that these numbers are incredibly weak just by glancing at this. 1 here, 0 here. These are incredibly weak numbers. This basically means that there are no stocks in any of these indexes making new highs. Again, compare that to where we were 6 months ago, which even that was pretty weak, but we were up in the 170. What was this? 105 there on the NASDAQ. So when we see numbers down here in the single digits, numbers at 0 in the S&P 600, that's incredibly weak. Nothing out there is making new highs. That's important to know. We can then look at that and think about the new highs versus new lows in maybe a little bit more easy to interpret kind of fashion. Here we have new highs minus new lows across the board for a bunch of these different indexes. So in this case, again, positive is going to be good, negative is going to be bad. We're down here in the red. That means that we've got more stocks making new lows than stocks making new highs. That has been kind of the theme of the last 6 months or so. As you can see, a lot of red on these charts. We've got, again, kind of classic view. You'll see this a lot on these charts in this list. The NYSE here, we've got the NASDAQ here, the S&P 500, S&P 400, and the S&P 600. So same kind of stack that we had before. We're looking at new highs minus new lows. Again, when these are moving lower, when all of these charts are in the red and continuing to move lower, that means we have a lot more stocks making new lows than we do making new highs. New highs are really just very, very hard to come by these days. So this chart gives me a sense of that at a quick glance across the board. Same kind of idea here, advanced decline lines, another kind of classic view, advancers versus decliners. We can do that on the NYSE. We can do that on the common stock only version of the NYSE as well. We've got that on the NASDAQ, the S&P 500, S&P 400, and the S&P 600, large caps, mid caps, small caps. So across the board, we can think about advancers versus decliners. Simple concept: if these lines are moving lower, that means we have more declining stocks than advancing stocks. If these lines are moving higher, that means we have more advancers, which is a good thing. Right now, all of these are moving lower, or at best drifting sideways, but really a lot moving lower here, kind of similar to what we saw reflected on the previous chart as well. Next up, as we kind of get to the end here, we've got what I call my positioning and exposure chart. This takes a look at put-call ratios, equity-only put-call ratios in the top, and then what we call the North American Association of Investment Managers, North American Active Investment Managers Index. Basically, active managers in the lower panel, how exposed they are to the markets on the long side, and then traders up above. The simple idea here is traders are buying puts and calls, so we can look at sort of what they are buying, what traders are buying out there in the markets. If traders are buying more puts than calls, this ratio is going to be higher. That means that traders are basically betting that the market's going to move lower, which is kind of a bearish sign. If traders are buying tons and tons and tons of calls, this number is actually going to be lower because this is puts versus calls. So if traders are betting that the market's going to go higher, that means this number is going to be lower. If traders are betting that the market's going to go lower, that means this number is going to be higher. A little bit inverse, but again, one of those things that you kind of get to know as you use these. I've got kind of the traditional range here actually between 0.75 and 0.55. So anything in between there is kind of the neutral zone. Anything below is actually what I like to call the complacent zone. That means that traders are just kind of complacently betting that the markets are going to go higher. And anything above 0.75 is getting into pretty bearish territory. Big bearish bets by traders. Down below, we have a weekly survey of active investment managers. So we've got, again, traders up top. Down below, we've got the active investment managers, kind of the institutional side. Are they exposed on the long side, or are they on the sidelines? That's what this is intended to measure. So down below, actually, we have something called the Ridex asset flows. Basically, are they bullish or are they bearish? Are investment managers bullish or bearish in terms of where they're actually positioned? And then up top, we have that actual survey. Are you long? Are you sitting on the sidelines? Basically, when this number is really high, that means that active investment managers have a lot of long exposure out there in the markets. When this number is really, really low, as it is right now, anything really below 50 is pretty low. When this number is low, that means that active investment managers are kind of sitting on the sidelines. So between this chart, we can see that traders are kind of buying generally more puts than calls, kind of betting that the market's going to go lower. And we have very low participation from active managers. None of that together is very bullish. So that's what this chart gives me at a quick look. Finally, we've got rates here, a look at rates. We've got a whole bunch of different yields on this chart as well. We've also got the ratio between 2s and 10s there, and then also the S&P 500 for a little bit of context. This is a longer term chart going back about 20 years. We can see kind of how rates have been moving. Obviously, really drifting lower for a long time, but we can see that where rates are heading right now is pretty unique relative to where we've been for the last decade or so. So I do like to keep an eye on rates. I also have what I call my ultimate S&P 500 chart, which really kind of sums up actually a bunch of the things that we've already looked at. So we've got the S&P 500 itself here, a pretty standard look there. The only unique thing is that I've actually shaded everything below the 200-day moving average in green. So basically, if we're out of the green, that's good. If we are below the green, if the price bars are sitting in that green shaded area, that means we're below the 200-day moving average. That's not a good thing for the S&P 500. We spent a lot of time down there, recently, the longest stretch since 2008, I believe. So I can kind of keep an eye on what the S&P 500 itself is doing. And then down below, like I said, kind of a summary. We've got a whole bunch of these different ratios to take a look at as well. So breadth and offense versus defense, growth versus value, things like that all on this chart. Also some things like equal weighted S&P 500 versus cap weighted. We've also got the S&P 500 versus bonds, some of those things, kind of a longer term view of some of those key ratios. I also like to keep an eye on oil and gas. So we've got a little bit of a multi-year look here at oil and gas. We've got West Texas International and Brent on that chart up top. Those move fairly similarly. We've got one in gray, one in black, but you can see oil and gas prices up at the top, and then also nat gas prices down below. So another key commodity that I like to keep an eye on here on a daily basis. And then finally, we've got a chart that's not going to make sense to anyone unless you're me, but it's in here because, again, this is my chart list. So this is what I call my super core year to date. These are some of the key long-term assets that I actually like to invest in just for sort of simple exposure to the markets. All of these are very low-cost ETFs. Again, things like VTI and SPTM. Low-cost, broad exposure, fairly low risk if you're thinking out 10, 20, 30 years. That's kind of what these funds are, funds that I'm willing to hold for a very, very long time just for broad, sort of stable exposure to the market. These are kind of my ultra long-term positions. I do like to keep an eye on how those are doing year to date. So I've got a chart in here that allows me to do that. I've kind of split it because I like to think of VTI and SPTM a little bit differently from some of the more targeted ETFs as well. But again, a great example kind of what you can do with some of the Sharp Chart settings. You can actually take this chart and modify it if you want, one of your positions up top and some of the other ones down below. Maybe you've got a couple of your ETFs up in the top panel and you've got a couple of your stocks in the lower panel. Anything that you can think of, you can kind of use this chart as a starting place. So that's my daily market evaluation. And again, I use this every single day. I can actually flip through it pretty quickly, a little bit slower when I'm explaining everything to you. But that is kind of what that chart list contains. The next one actually is a global equities, we're going to do the US equities list. A US equities list, again, the same concept. I can use Chartbook to flip through all of these very, very quickly. We've got things in here like the total market, VTI. We dive into the NYSE. We dive into the NASDAQ. All of these charts are right here for me. And so on a daily basis, I can just kind of click through quickly all of these different key US indexes that I want to follow. Now, I'll actually take a look at this in summary view. I've jumped over to summary view so you can actually see everything that's in here. Again, I've organized them by using a numbering system. So again, kind of starting at the major indexes, the big indexes, and working down to some of the more specialized ones. We've got all of these in here, though, 17 different indexes that I like to flip through on a daily basis. The great thing about this list, it gives me two things. It gives me those charts all in one place, but I can also turn on daily chart list reports and weekly chart list reports for this list. And that means that every day and every week, I actually get an email right to my inbox that tells me what all of these different securities did, what all of these different indexes did on the day and on the week. So I like to keep this list for a couple of different reasons. It is highly functional. Again, it's part of my daily review process, part of my weekly review process as well. But it's also a useful list to have all of these in one place because you can turn on those reports, get that summary to your inbox, to your phone, to your desktop, wherever you have your email. You can get that summary at the end of each trading day. So that is going to do it for us here on this week's episode of Stock Charts in Focus. I want to thank you again so much for joining me. Hopefully this has been fun for you. Hopefully this has got the gears turning in your head. Again, that's kind of the mission of today's show. Get you thinking about your own daily and weekly process. Now, before I let you go, remember ChartCon, stockcharts.com/ChartCon, all one word, all lowercase. Learn more about the event. It's kicking off in just a couple of weeks. We'll talk more about that on next week's show in particular, but it's going to be an incredible event. We've been really just hearing great things from all the presenters. Everyone getting so excited, the content that we're lining up for you. So many amazing speakers. Again, folks like Larry Williams that have been trading through cycles for decades. Just incredible. Linda Raschke, Martin Pring, Mark Chaikin, Tony Dwyer. We've got such an incredible group. I really can't wait for the conference to kick off. So definitely save your seat. And if you're a Stock Charts member, you get a special price. You get some special perks as well. You get access to the conference indefinitely. So very exciting stuff that we've got coming up here with ChartCon next month. So definitely check that out, stockcharts.com/ChartCon. Remember, we do this show every Friday, 3 p.m. Eastern Time, up on StockCharts TV. All the different ways to watch, the live platform, the YouTube channel, and that on-demand platform as well. So definitely tune in. We'll be back next week with another episode of StockCharts in Focus. My name is Grayson Rose, Vice President of Operations here at StockCharts.com. It's been good to be with you. I'll see you again soon for another episode of the show. But until then, chart on, my friends.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.